Often considered the world's greatest investor, Warren Buffett has just made a massive move. What is it and why should we be paying attention? In today's video, we take a look at that along with big earnings from Tesla, Microsoft, and Meta. Were they good or kind of bad? And do we have another 100% stat for one of our favorite metals? Yes, we may have been bullish on gold for the last 18 months, but is that about to change? In today's video, we have a lot to cover as everything is getting wild, including bonds, stocks, commodities, and cryptos. Let's take a look at all of them together right now. Well, welcome back everybody to the Daily Show where we help you understand markets better together. Today we've got a big one because of course it's earnings season kickoff of the major tech, Microsoft, Tesla, and Meta, and then there was Nvidia, big dark pool trades coming through as well that we need to discuss in today's video. But let's kick things off with often who is considered the best investor in the world, and that is of course Warren Buffett. Yes, it looks like his fund is making waves once again with an all-time record of $325 billion of cash on hand. Now, this is a pretty big deal because it means that basically he is continuing to ramp at an incredibly fast pace throughout 2024 into 2025. So it always asks the question of what is he doing? A lot of you believe it's because of his age and he's getting ready to transition and things, but I like to think of it like any great investor would. If I was 100 years old and I was following a great system, which we've had, and we were making money on it over the last 60 to 70 years, then why would I change anything? Yes, you could say that maybe I'm not going to be there for that eventual gain, but I still don't think I would make any changes to the overall system. You would stick to what you know and stick to your core principles and beliefs. And ultimately, if you do have edge in the markets, that's exactly what you should be doing. So what is he seeing that many people aren't? Well, in today's video, we'll talk about what track we believe we're on in terms of the analog right now. And obviously, if there are some concerns in markets. And of course, one of those big concerns always comes from the bonds market. Are we starting to see cracks forming in bonds? Now, we've long argued that we haven't had really any cracks in the bonds market since 2022, since the bull run started. But some things are starting to look a little bit interesting here. And this chart here is from Jim Carroll over on X, if you want to give him a follow. And basically what it is he's looking at high yield bonds and he's looking at the advanced decline line over time. And he's saying that when you start to see these bonds starting to fall off in terms of advanced decline line, that can either be a period of sideways action where you're seeing a lot of rotation or even closer to the end of a run. Now, I think it's important to note that when you start to see these declines in the advanced decline line on high yield bonds, it can be quite laggy. So it may take even upwards of 0 to 11 months for anything to actually crack in the system. And it's very important that you think about it this way. So of course, we probably have time here. We've already argued we think there's another all-time high coming in for the stock market this year. And in general, this is something that we need to watch together. So of course, we will be doing so and we'll track that throughout this year. Now, we mentioned earnings. What's going on? Well, of course, we had big Tesla earnings and the market was down in after hours and then suddenly it was up as Elon went through and obviously discussed a few things. Now, when you're taking a look at these year-on-year figures, you're going to look at a lot of negatives there and say, well, that doesn't look very good. Well, funnily enough, one of the biggest earnings for Tesla was actually $600 million of market-to-market gain in digital assets, which made up, of course, I think it was around 26% of Tesla's total earnings this quarter. So yes, Bitcoin was one of the big earn games. But if you want to think about what really was been happening, this is it right here. In terms of the revenue, it was up 2%, net income was down negative 71%, and deliveries were up 2.3%. It was the after hours call though, where Elon went super hyper bullish about everything to do from Optimus to self-driving cars to everything else that had the market kind of getting excited once again. Now, a lot of people have said in the comments below, dude, you got to start talking about the fact that Tesla's even a car company anymore. Sure, I know the transition is there. And ultimately, you're going to have to look at this on its merits of probably all of these bull case scenarios, EVs, obviously FSD, energy in general, and then of course the new one, which is robotics and AI. It's a natural progression of the AI infrastructure. I personally think that robotics is probably phase 3 of the AI rollout, so it might be a little bit while away. But again, Tesla's been doing pretty well. And you'll notice here that while it's kind of started to slump, The key will be in the next few earnings results. So the market was up after hours. What do you think, though, in the comments down below? Are you happy with that result? Do you think it's doomed? Let me know, and we'll check some of those out in the next video. So what about January? You know, we're almost at the end, and you know that we love the quad. So basically that means we always look at the Santa Claus rally, the first 5 days, of course, the toy 2 month, and the big January read. Are we going to see a positive January or negative one? And are we going to see a very positive one? Because, of course, if we get over 2% gains in January, that leads on to a pretty solid year a lot of the time. Now, this will be an important factor. We're going to figure out whether we're going to get that in just a few sessions. And obviously, at this stage, we're up 3% at the time of this recording. So we would meet this cutoff, and therefore, it could be all green, all good for at least the foreseeable future. This is a very, very important read, and it will help us to get a bit of an idea on how we think the rest of the market year is going to play out. Now, it wasn't just earnings after hours. Of course, Microsoft did miss a little bit, and Meta was kind of holding steady up 2% after hours. But it was also the FOMC, and they changed a few wordings here. I personally thought it was a snore fest when I had a look at it, and in general, it was just pretty much changing a couple of basic words. To me, it's just wait and see, okay? So let's just cross this out. I'm just going to say wait and see. And yeah, that was not exactly what Trump wanted to hear, and they're already having a scuffle similar to last time. So the Federal Reserve versus Trump, I think, is going to be the story of 2025. But regardless of that, what actually happened on the markets, we go to the VIX futures, we have a look at the term structure, and the answer is nothing. So was it a non-event? Yeah, completely a non-event, at least in our opinion, and we just didn't see any strong reactions off it. And that's kind of okay, because really we need to be focusing on earnings. We've already shown in plenty of our previous videos, which if you haven't subscribed yet, make sure to do so you get this type of information, which is that if we are seeing companies generally present positively for the forward guidance, that usually takes us into that last third of a move. We get 80% of businesses coming through with good forward guidance. That usually takes us into that next run. And of course, then we need to start looking at bonds. We need to start looking at all sorts of things and cracks in the system. But still, things are looking okay. Let's move over to dark pools. We had one down the bottom, which gave us the buy, which was pretty sweet. This was an excellent trade back down here. And then we had one at the close yesterday, which was most likely a little bit of profiting. Now, since then, we saw NVIDIA actually drop back down to around 122 after hours. And we actually did get another large trade. So let's take a look at what that was. And yeah, it looked like it was a bear short closing. So it's kind of looks confusing here when you look at the charts, but about 30 minutes after the close, someone just transacted huge and probably dumped their bear position on NVIDIA. So it looks like someone that had exited or entered right up here had kind of just gone, you know what, I'm closing that position off. And this was a dark pool after hours. So pretty important to note this. Certainly a decent sign for people that have been going bullish on the semiconductors as of recently, and we'll look at the price action a little bit later on. What about Ethereum? Now, Ethereum has been contentious. A lot of you guys absolutely hate it because it's probably been the worst of the alts, the big alts this year. And Ethereum has come down quite a long way. It's obviously sitting at around that 3,000 to 3,100 at the time of this recording. Now, have we seen people buying that level? Well, I would argue yes. Big dark pool transactions, similar to the one that led us on to that huge rally back last year, have just come through. I'm going to guess that is buying. I mean, it just looks like buying to me. The same level as what we ripped off last time. Multiple dark pools coming through the low. I think this bodes very well that we should be able to hold within a couple of $100 here for Ethereum, and ETFs are heating up on that particular pair. And yeah, they really need to, because of course 3,000 is a very important hold level. Now, a lot of people are making a big deal out of a whole bunch of different stats to do with the Qs. We reported in our previous video that basically everyone was buying the NASDAQ yesterday, whether it was somebody buying from retail or hedge funds or big algorithms or anything, they were all in. And we got a read here that comes from a massive fall off into a massive buy. And you'll notice here that it's like 50% stats. So generally speaking, you're not going to get too many reads from that huge amount of pump, because remember, that does mean animal spirits are alive and people are wanting to buy, but it doesn't tell us anything statistically just yet. So that's why we're looking more at the dark pools and more at this type of thing here, which is of course the current analog for markets. The Federal Reserve started to cut last year. What are they doing now? Well, the market has shown us that it's on the path of what's called a soft landing. Now, I'm not quite on the side of the soft landing, but hey, I don't care. I'm going to follow market structure. And that's why we often say patience, react, don't predict. We're still bullish for now because the markets are telling us to be so. Remember, even if you have a bearish overtone, like we've detailed here over the last year and a half in particular, you cannot just go and randomly short the markets. They will squeeze and squeeze and squeeze until every bear is dead, and then all of a sudden it'll be a massive problem. So currently the analog is pretty good. We're following generally the path of the soft landing and not of the crash. Now, we remember at the start of today's video, we talked about a 100% statistic. Well, it turns out that there is one, and we've already been bullish on gold, and we're actually even thinking that maybe the US dollar is actually going to start weakening, which could be good for gold here. This is what traditionally happens. But take a look at this stat here. Now, this is when hedge funds kind of stop buying gold. And we've often said, don't follow the hedge funds. The hedge funds are pretty bad. We like the dark pools. We like the big transactions if we can get them. But the hedge funds, when they're all doing something, not when just a few of them are all doing something, but when they're all doing something, it's usually wrong. So 2 months later, after a read like this, gold has 100% been up. Now, that doesn't mean it's going to happen again. You can say sample size too small, man, what are you doing? But some of the better runs here of the last kind of decade have been at around these types of periods. And you can see here that it's either coming off consolidation bases, which is exactly where we are right now, and it's also happening a lot of the time in breakout periods. So I'm kind of feeling pretty good about this. Obviously, you can see here that the average is, somewhere around 5%, which is no shabby feat here for gold. And it's another positive read that we've had. Speaking of positivity, yes, China continues to see quite a lot of news about it. That well-timed DeepSeek information into Chinese New Year kind of gets rid of some of the negativity, which is obviously the record low. That is so many outflows, it's not funny. As we've already reported, when everyone goes super bearish, that's fear in the street. Generally, you want to start looking towards the bull end. So far, so good on that. And short interest, obviously, will be the interesting topic of next week because we may see a huge market move towards the upside due to people being possibly squeezed out after so many days of the market being closed. Will shorts get crippled? Well, they do have a chance to hedge in other markets, but we'll see how that plays. Now let's talk about earnings. We've seen Microsoft, Meta, and Tesla. Look, Tesla certainly didn't move anywhere near the options market expectations, nor did Meta. Meta was up about 2% in after hours. Microsoft was actually down 4%, so it actually sits right around where the options were saying. But it's not the end yet. We've still got a lot of large companies coming out. The notable one, of course, is Intel and Apple over the next 24 hours. And if they continue to kind of be that mostly bullish kind of sign or even sideways, again, it helps the case for an all-time high to be reached on the stock markets over the next coming month. Now, let's take a look here at Bitcoin ETFs and Ethereum. We talked about how it looks like someone's holding up the market and starting to buy Ethereum. Well, this is, of course, delayed, the 28th data here. But you can see, generally speaking, a little bit negative on both Ethereum and Bitcoin, but overall still very positive on Bitcoin and barely negative on the 7-day flow. So I wouldn't say too many things to look at there in terms of flows into ETFs. What's important are those big transactions right where you'd expect them to be. And I think that's exciting, especially if we see the right price action. Now, speaking of price action, S&P 500. It broke down, it moved downwards into 6,000 during the session, and then, of course, rallied back up. And this is, pretty much what you'd expect. If you go to the 2-hour, you'll notice during the session itself, we have these wicks. So that's effectively like a tweezer into the positive direction. Now, if we do get a new high, that's kind of pointing towards not only the gap fill, but probably push into that positive gamma and squeeze higher kind of event. If we do end up taking this low, which is just before 6,000, like 6,010, then that could push back down to the 59.50. So at the moment, I think you've got to be net overall generally positive on the markets. The earnings have been good. As we've argued, that dip seemed a bit overzealous in terms of everyone was just going wild about it. We've seen Morgan Stanley downgrade and a few others downgrade Nvidia, but still they're holding their 12-month target still well above the current price. So even with the downgrades coming through, it's not that detrimental, at least what the street's saying. Let's have a look at the US 500 on the futures. You'll notice here when you look at it on a weekly, it looks like a massive reversal of people buying the dip. When we take a look at the daily, you can see it here again. And when we look at the futures market, it's again trying to turn towards the upside. And it's making a series of higher highs and higher lows, which is obviously okay. Here are the options, high and low levels, but let's take a look at the 0 DTEs, 6100, 6100, and 5900. Basically, it's all the standard levels that we've seen. 6K, 5950, 5900 for the puts, so every 50 points basically, and 6100 plus will positive gamma the market and, potentially get that big squeeze in, which of course pushes 6200 plus. So you can't really say this is a super negative looking market. You do definitely have a lot of puts underneath, and then you've kind of got that 6100 cap at the moment, which is going to be difficult to get through. But if it does through earnings, then it'll probably push quite a lot higher. When we move over to something like the Nvidia stock, we just basically saw it fall after hours to around 123, 124. And it's just sitting above the 120 put level and of course below the 130. So we kind of expect it to be trapped for now. But the dark pool close of that big short, that could bode okay for buyers to recommit back to Nvidia and semiconductors and try to push it up. We already know that base that was formed at the most traded zone is very solid. Huge trades going through there. Now let's have a look at Tesla after hours, and you can see here that it's really in the middle of nowhere still. Anything from 380 to 400 is generally the buy pressure, and anything from kind of like 450 we think is where the sellers come back in. So for now, Elon's hyped the market. It looks like after hours, so things are going well. Update on CTAs. We've seen, of course, CTAs recommence to buying, which is the first time they've done this for really a long time in such a big rip. And that usually means they're going to try to continue that momentum. So again, CTAs are not heavily positioned too highly anymore. That's good. That means that most momentum funds can get back in. And at the moment, they have been purchasing. Let's now jump on over to the charts. No updates on high yield in terms of options and anything going on there in the spread. So no real concerns there. The VIX has dropped back down to 16.55. So again, the fear is kind of dissipated. And you can see here, high yield junk still holds relatively well, although the Vance decline line is certainly starting to moderate quite a lot, which we talked about at the start of today's video. Certainly something we'll be watching along with spreads over the next coming months. We really want to see whether the bonds market is warning us of a freak out in the markets. Often the bonds market will show us early, and then the stock market will react maybe even months later. So we really will be looking for further signs in the bonds market this year. Make sure to sub for that. Almost no moves in yields. You can see here US 10-year after the FOMC kind of sat flat, again underneath 4.5. That's probably going to push lower yields, and that will then move into the dollar and probably push the dollar down to 106. Still thinking the dollar is probably overall weak. So we're looking towards 106. It gets below 106. That's probably the end for the dollar high for now. And that will be a big one for swing traders. And of course, that will also be bullish for some of the other positions we're looking at. Gold continues to sit sideways before the all-time high. That's good. I like it. What do you guys think in the comments? We've got to love gold right now, right here. Looks pretty good. And silver looking better as well. Long leg doji, 2 weeks in a row. Now starting to pressure 31. Ooh, can you feel it, guys? All right, so we got silver starting to push through, and 31 plus, that's going to be pretty sweet. So I'm liking the TA here, liking a 31 plus. Like anything, you have to take it with, a degree of skepticism. You're playing stats whenever you look at anything in the markets here. But certainly, dojis into a decision made, you can never say that that's a bad kind of position to be in. Now let's have a look here at US oil, still kind of declining slightly, and it's still in a downward trend line, a series of lower highs and lower lows, and still no higher high. So we haven't really seen any change. We're certainly watching this zone, and we'll update if any changes do come through. Have a look at Tesla. It's going to open as an island reversal. So that is that we've got, if it does hold up, so that is that we've got here 3 days of kind of sideways. Then we're going to gap up tomorrow if it holds at 4% and a bit after hours. And that could be bullish for a lot of traders. Basically, they're going to then put stop losses underneath here and go bullish. And you might say, how can you be bullish when that earnings was a miss? Hey, don't ignore the market. Elon's hyping, I'm telling you. He was like, I don't know if you listened to the call, but he was going off on tap and everything you can think of. So yeah, basically there is a chance here that people will get hyped off it. And again, it is an island reversal, so it is what it is. If you do have stops on that, they'll have to be underneath the level. Microsoft was a disappointment, down to 421. It's probably a bit of a loser from the DeepSeek information. Obviously, they're tied to OpenAI, etc., so they were down. And if we take a look at Meta on the stock market post earnings, it just continues to absolutely thrive in this environment and keep pushing higher. Is it overpriced? Hey, maybe, but it keeps getting upgraded. I mean, you can see here that KeyBank they've raised their prices now from 700 to 750. So everybody's going well above. They're in euphoria for Meta. They're loving it. In terms of Apple, that's not Apple, that's Amazon, but Amazon looks all right. Apple has bounced back up to resistance before earnings, so it could easily drop and flop back to 220 or rip a new high. If it does manage to rip a new high, then I think overall the structure is really looking a lot more positive. Most traded area, if you manage to snag it down here, well done to you. And the next one is going to be Intel, of course, which is absolutely in the pit of hell. So this is probably widely regarded to have terrible earnings. I don't even know if it's going to be terrible earnings, but I wouldn't be surprised at all if the market tries to go bullish on this one. We're talking about it in our private community. Links in the description down below if you want to join that free 7-day trial. But guys, this is one of those ones that it's just like, can it get any worse? It's already been horrible for so long. Earnings have always been bad. So even with the bad earnings, has it done enough? It certainly does have some price action changes towards the upside. Nvidia keeps pushing around this level. That's okay. Nothing wrong with that. As long as it doesn't really drop the 115, it should be okay. And it's pulled down and then found a little bit of buyers at the end of the day. People close the shorts. I think it's looking pretty decent. Now, HSI still looking good. Obviously, we'll see how Chinese New Year plays out with that one. And US 2K starting to bounce back up after some dojis. Again, I think the US 2K is a bit misrepresented at the moment in terms of people's activity. And NASDAQ after hours starting to plow towards trying to fill that gap. So 21,700 would probably be where a lot of people are going to have some resistance and a few TPs there. But I think it probably is again going on to an all-time high. When we have a look at ETH, I mean, you love the dark pools, yeah? But I don't love the price action. The price action sucks, man. Look at that. That sucks. That is terrible. So it comes down to 3,000, rejects, then comes down again. Oh, it's disgusting looking. But that doesn't mean it won't bounce and it can't get 3450 plus. If it does that, breaks downward trend line, starts to get really good momentum behind it. And you know what? I never ignore the old dark pools. So they're coming in big and thick and fast. So that's a good sign for a good level, just kind of crappy price action. Speaking of better price action, Bitcoin still holding within the range. And I always say that's A-OK by me. Of course, you don't want to drop the range too much. But at this stage, considering the break we had last on the 13th of Jan, Bitcoin looks set to potentially want to rival all-time highs. When it comes to the rest of the news for the week, not too much going on. We've got GDP numbers. Supposedly they're getting revised down according to Goldman Sachs, but we'll bring that in our next video. Some core PCE as well, which is what the Fed uses to figure out what's going on with inflation. Either or, it's really just about earnings. Now, if you enjoyed today's video, please remember, guys, to follow us over on X. Check me out on LinkedIn as well. I'm posting a bunch of stuff. If you're from Perth, Australia, or Brisbane or around the Brisbane area, make sure to come out to our free events we're doing in February. They are going to be absolute bangers. You guys need to come and we're going to share some phenomenal information. So if you're able to, make sure to do it. Thanks so much for watching. You subscribe, smash that alert button down below, and we'll see you tomorrow for another wrap-up video to figure out what the hell is going on right now in these markets. Have a great day, guys. Bye for now.